Every single home ownership rate reduction of 1% equates to an additional 1 million households. I want you to remember that number. Forget about the echo boomers, the 56 or 58 million echo boomers. Forget about the baby boomers. Forget about the immigrants. Let's just focus on the smaller one, the 1 million apartments that are required for every 1% reduction home ownership rate. Sam Zell recently said, this is the first serious recession we've had where the real estate industry didn't start in oversupply. He says there are no empty buildings in the United States, ladies and gentlemen. He says we haven't built anything since July 07, and we're not building anything today. Since July 07, there have been no cranes in the skies, ladies and gentlemen. If you go to the United States, the construction industry has stopped. Why did it stop? Well, very simply, people weren't buying apartments anymore. Banks weren't lending for construction, which made it very, very difficult. So what happened is, usually at the end of a boom, you have an oversupply of properties, and it takes a while for the market to absorb those properties. Sam Zell's saying, and this guy understands multifamily assets, he says that we didn't start in a position of oversupply. I want you to have a look at this, and this might be a little bit hard to read, but the graph here starts from 1964 right through to the end of 2010. Now, it says 2009, but there is a year after that. If you have a look at 1972, they almost built 1 million apartments in that year. I mean, that's what America is capable of producing at its absolute peak. How many apartments did they build in the last 2 years? Can you see that? Well, let's zoom into it. Because you have a look here, in 2010, right across America, there are only 98,000 apartments completed. This year, they're only looking at completing 53,000 apartments. And next year, well, people are starting to build now, but it's only going to be 79,000. So you see, ladies and gentlemen, not only do you have a significant increase in demand for residential tenancy, you have an incredible limited amount of supply. I mean, the imbalance between household formation and the actual number of multifamily starts is very, very small. As you can see here from this graph, the longer line, the darker purple line, represents the number of household formations. So by the year 2012, which is on the far right-hand side of the graph, it shows you there that you need approximately 1.6 million, yes, 1.6 million new households are being formed, but they're only building less than a third of that. The imbalance, ladies and gentlemen, in US residential supply and demand is growing and growing significantly. Marcus & Millichap, which is probably the largest real estate commercial brokerage firm in the US. They do multifamily assets, they do commercial properties, they also have their own research division. You can read a really interesting research report that we've included in the product disclosure statement there that we've asked them to produce. They said multifamily starts are at a historical low and are still roughly 1/3 of the level considered necessary to replenish obsolete stock and meet rental demand. Ladies and gentlemen, an old economics lesson: supply and demand. Where the supply curve meets the demand curve is known as the equilibrium. Let's call it the market price. Just like with anything, whether you're talking about bananas or whether you're talking about coffee or talking about real estate or talking about shares, it is all about the balance between supply and demand. If you have a situation where there is an increase in demand, so let's say, for example, that all of a sudden, instead of drinking 2 cups of coffee a day, we all decide that we want to start drinking 6 cups of coffee a day. We create more demand for coffee beans. What will that do to the price of coffee beans? It should push the price of coffee beans up. Now, on the other side of the equation, if there is a problem in Brazil where the coffee beans are being produced and they can't supply as many coffee beans and there's limited amount of supply, but we still want our 2 cups of coffee a day, what happens to prices of coffee there? It goes up. Remember a couple of years ago when there were no bananas? Bananas went from whatever they are now, $1.99 a kilo, up to $15 a kilo. There were still some people buying them at $15 a kilo, restaurateurs and so on, who needed to buy them, but the limited supply caused the prices to rise. We have a very unique situation in the US at the moment, ladies and gentlemen, where not only do we have an increased level of demand, we have a decreasing level of supply. And what that causes is a double shift, where prices increase and increase again. And it's these economic fundamentals that I believe is the reason why you should be looking at quality US-based real estate assets if it suits your investment profile. So let's summarise what we've spoken about till now, ladies and gentlemen. At the very beginning, we discussed the United States of America, and we talked about the low property values, the attractive rent yields, we spoke about the low interest rates and the strength of the Australian dollar, and we said that may be an opportune time to look at US assets. We also gave a general warning about buying cheap US assets and saying that you've got to be careful, buyer beware. These assets may not be as cheap as you think they are, because what you're looking for as far as an investment is concerned is a return on your investment. We also had a look at multifamily assets, and we understand that the combination of the increasing levels of rental demand, the limited levels of rental supply that's currently being constructed and is due to be constructed in the United States, and the business-like nature of multifamily real estate means that we may well be seeing the beginning of the golden age of multifamily real estate.